All right, next we're going to look at how to prepare the cash budget. So we have to make some assumptions here for Royal. So we assume that they maintain a 16% open line of credit for $75,000. They maintain a minimum cash balance of $30,000. They borrow money on the first day of the quarter or repay loans on the last day of the quarter. They pay a cash dividend of $49,000 in April. They purchase $143,700 of equipment in May and $48,300 in June, both purchases made in cash. And they have an April 1st cash balance of $40,000. So let's start with April. You start for the cash budget, you start with your beginning cash, and that they tell us here is $40,000. Then we add in cash collections. So remember from our cash collections calculations, we determined how much cash would be collected in April, May, and June, and for the whole quarter. So I'm pulling this from the cash collections calculation right here. So the 170, the 410, and the 360, which we already completed, that's where those numbers are coming from. So I take that 170,000 for April and plug it in here as cash collections here. And the beginning cash plus cash I collect is the total cash I have available. So here it's 210. And now we subtract out all of our cash disbursements, so cash outflows. So first we look at materials. So we completed the expected cash disbursements for material for each month and for the quarter, and we already had determined that the total cash disbursements we expect related to materials purchases for April was $40,000. So that's why we put $40,000 here as a disbursement for materials purchases in April. And for direct labor cash disbursements, we completed a direct labor budget. And we determined in April the total direct labor costs for April is $13,000. So that's where the $13,000 is coming from there. Manufacturing overhead cash disbursements, we had completed a manufacturing overhead budget as well. And we determined that in April, the total cash disbursements required related to manufacturing overhead is $56,000 or would be $56,000 in April. So we have $56,000 there. And also SAG expenses. We completed a SAG expense budget that not only estimated the total SAG expenses for each month, but also the amount that would have to be paid in cash. And in April, we determined that $70,000 of the $80,000 would be required as a cash disbursement to pay those SAG expenses. So that's where that $70,000 is coming from. But in April, they also said that Royal paid a $49,000 dividend in April. So we also have to subtract out or add in rather the $49,000 of dividends as part of our total disbursements. So when we add all of these cash outflows together, we find that our total cash disbursements for April is $228,000. So at this point, you take your cash available minus the cash disbursements, minus the cash outflows. And it looks like at this point our cash balance would be a negative $18,000. But remember, our minimum cash balance has to be $30,000. So we're going to have to borrow money in order to get our minimum cash balance to $30,000. So our cash deficiency here is $18,000. And we're going to have to borrow $48,000 in total. $18,000 of that will go to cover that deficiency, which would leave us with $30,000 left over in our cash balance to meet that minimum. So our ending cash balance, due to borrowing that $48,000 and factoring in that cash deficiency, our ending cash balance in April would be $30,000 here. In May, we'll do the same thing. Well, the ending cash in April becomes the beginning cash in May. Add in the cash collections from our cash collections computations. So our total cash available for May is $440,000 based on our budgeted figures. Then we add in all these cash disbursements, these cash outflows. We have the materials, direct labor, manufacturing overhead, and SAG that all came from those various budgets. But then they also tell us that in May, $143,700 of equipment was purchased. So we have that cash purchase of equipment here that we also have to include as part of our total disbursements. When we add together all these cash disbursements for May, we find that our total cash outflows is $400,000. The total cash available of $440 minus the $400,000 of cash disbursements leaves us with a cash balance of $40,000. Our minimum cash balance that we have to maintain is $30,000, so we really have a cash excess here of $10,000, so we don't need to borrow anything at this point. So our ending cash balance for May is $40,000. The cash I end May with is the cash I start June with. Adding the cash collections for June shows that we have total cash available, or based on our budgets, we'll have cash available in June of $400,000. Then we have all these cash disbursements, materials, direct labor, manufacturing overhead, SAG, all these cash disbursements. And then also in June, it says we also bought other equipment in cash for $48,300. So we have that equipment purchased there. So we add up all these cash disbursements, we see total disbursements of $269,500. The total cash available minus the total cash disbursements leaves us with a cash balance of $130,500. Our minimum cash balance is $30,000, so we have way more than that. Our cash excess is $100,500. But remember, we borrowed money in April of in the amount of $48,000, and it says money is borrowed on the first day of the quarter and then repaid on the last day of the quarter. So this $48,000 would have to be repaid in June. So we would have to subtract out the $48,000 from our cash balance because we have to repay that, and we have to pay interest. So keep in mind here we have a $48,000 loan from our open line of credit. We pay a 16% interest rate here. So 16% of that $48,000 is $7,680. But this is only 3 months have passed. So we can divide that yearly interest by 12 months and multiply it by 3. So the interest we would have to pay on the 3-month loan is $1,920. So in June, we would have to subtract out not only the repayment of the loan, but also payment of interest. So we take that cash balance of $130,500 and subtract out the repayment of the loan and interest. We are left with $80,580 in cash for June. So that's not only the cash we end June with, but the cash we end the quarter with. And the cash I began the quarter with is the cash I begin April with is the cash I begin the quarter with. So to find all these other amounts, we would just add together the cash collections for the quarter is all the months added together. Same with the cash available, and same with all these cash disbursements here. All right. So that is how we set up the cash budget. And now we're going to use everything all together to complete the budgeted income statement and the budgeted balance sheet.